Are you still thinking about whether you should buy or sell a home in this Sacramento real estate market? Well, today we're going to jump into the really what's going on with the market here in the Sacramento area, and we're going to go and review some articles that are going to be talking about the market nationally when it comes to real estate, so stay tuned. Hey everybody, welcome to Sacramento's Real Estate Channel, where we talk everything there is to know about the brand new bills and of course, what there is to do here in Sacramento. If you've been thinking about making a move to the area, subscribe to the channel. And just so you know, we go live every Tuesday at 5:30 p.m. We'll see you there. All right, well, there you have it. Today, guys, we're going to talk about the market and really going to talk about the outlook on the 2023 market. But first of all, Happy New Year's. Hope you guys are off to an amazing start this new year. It's been definitely hustling and bustling. You know, for the last few months, I would say that we've definitely felt a little bit of a slowdown in the overall market. But things in this last week or two, really since the new year, leading up to the new year, we've had quite a change. Maybe it's just me, but I've talked to a few other local professionals that I rub shoulders with, and they're saying the same thing, that they're feeling that kind of uptick in the market, which is really good. Really a lot of excitement from some of the buyers getting more active. I'm seeing it even just on our listings as well. We've gotten a few into contract just this last week, and listings are just getting a ton of activity with showing. So that's good. Seeing home buyers getting back into the market. Now, it's been interesting because this last week has just been absolutely terrible weather here in Sacramento. We've had just crazy storms like I can't even remember the last time we had storms like this. So just gusts of 25, 30 mile an hour winds. Some people were feeling like their roofs might fly off or whatever else, but it's just been crazy storms here in the area. So I think that's also been affecting of people actually going out and looking at homes when it's just windy and rainy like crazy. Now, we rarely have that, right? We in California especially, we've been asking for rain, praying for rain, but now we're definitely getting it, and almost a little bit too much. So if we could get a little bit of tone it down a little bit, I think we'll be doing all right. So, but it's good news. We're starting to see a lot more activity in the marketplace from buyers. You know, even just the requests, a lot of clients reached out even through our channel. So really appreciative of you guys, and we'd love to help you out any way that we can. So let's hop into it. Really what I want to discuss today is the outlook on the 2023 real estate market. Now, I know there's been a lot of hesitation from clients, people in the marketplace on both sides. It's not just buyers, it's also sellers, right? A lot of sellers right now are kind of in a position of, okay, I want to move up. Okay, I want to transition my family into this next home, into a bigger home. Sometimes it's, you know, people retiring or wanting to downsize, kind of cut monthly expenses and costs. But the thing is, the interest rate still affects them as well, right? They're used to their interest rate. They probably refinance or whatever. They might be at a 3.5% interest rate, 4%, whatever it may be. And they're transitioning and they're saying, okay, that's cool. I could sell my home. I could still make good money. But when I'm going out in the marketplace and looking to buy my next property, my rate is, 6.5%, right? So also creating some discouragement for some of the homeowners and sellers out there in the marketplace as well. So it's not just, this side's getting hit and this side is not. I would say kind of everyone's feeling it a little bit. But the positive news, for sellers, I don't think you've missed the mark. Now, I've talked about it on the show quite a bit, and you can see some of our previous broadcasts in the last week or two. I did some in-depth market analysis of what's exactly going on with pricing and such. So that being said, we're seeing pricing adjusting a little bit, but I would say that you're still getting good dollars for your property, right? If you price it well, if it's in good condition, good location, like you're still going to do well on that property. It's going to take longer to sell. Now, on kind of the opposite end of that is you're in a better position, because if you need the finances from your current property in order to purchase the next one, you're also in a really good position. Because you're having a lot more negotiation power with sellers or with builders on the market right now. A lot more incentives going on, a lot more closing costs being offered in negotiations, and sellers are finally starting to say, okay, this is the pace of the market. We're gonna negotiate with you. We're willing to work with you and be more flexible on pricing or incentives or credits, whatever it may be. So that kind of low in the market is actually helping you to transition. Because I did have this issue over the last few years, especially sellers or homeowners wanting to move into the next home, but they were worried that their home would sell fast and they wouldn't be able to compete on the next one, essentially being homeless in that transition. And of course, there was ways that we were making it happen, but that was definitely a scare for a lot of people. So I see some people hopping on here, and guys, as we move forward, feel free to drop some comments in the chat. Would love to hear from you, your thoughts, your opinions, maybe some questions you guys might have. Drop those down below. I'd love to answer them in the show for you, so I'll bring them up. Priscilla's, I know it was crazy this week. She's probably referring to the weather we had. So yeah, crazy stuff, crazy storms, and we're hoping that we're getting over it. I got waken up last night around like almost 4 a.m. and the house was just like feeling the wind. It was crazy. But I want to jump into this article. Really, main thing that I want to bring up today is this few articles that I've been reading, right? Different outlooks and perspectives versus maybe the main narrative that we're seeing kind of from mass media saying, builders are getting hit or this and this and all. I mean, there's a lot of stuff going on in the marketplace. Don't get me wrong. And it's not just real estate market. The economy as a whole is definitely changing. But I do want to bring up some different perspectives that are in real estate and nationally recognized too. So this is not just some side bloggers. But I did want to bring up this. Here we go. It's this article. It's through Housing Wire, and I can link it down below if any of you guys are interested in reading it. Basically, it's just I'm going to go through a few different opinions here, a few different quotes I have here, and we're just kind of walk through this really and just get a different perspective on the real estate market, helping some of you guys decide, should I buy or sell in 2023? Is it still a positive outlook or not, right? I think personally that there's opportunity in any market. In the red hot market, there was opportunity, and in a slowing, normalizing, maybe even depreciating market a little bit, there's still opportunity. So we're going to go through that as well. Now, this is very interesting. This is what they posted from Housing Wire on this article. They wrote, the red hot housing market of the past 2.5 years was characterized by sub 3% mortgage rates, fast-paced bidding wars, and record low inventory. But more recently, market conditions have done an about face. Now is the opportunity for everyone to become re-educated about what a typical housing market looks like. So, okay. So they're kind of coming on the perspective of like, we're going back to more of a typical housing market. Now, a lot of people will go back and forth on that, on what decides a normal housing market, right? We've heard it before that some people will say like, if it takes 3 to 6 months on average to sell a home, we have 3 to 6 months of inventory. Those are indicators for, regular housing market, whatever. But I think it really varies and really on location. Even in the Sacramento region, different counties respond differently, even different zip codes respond differently. And, even by the sub-community, the little neighborhood responds differently. Again, in real estate, it's always been location, location, location. So some locations do much better, in changing markets regardless. Yes, prices might not be as high or this and that, but I talked to a lot of my clients about this. I'm just like, hey, you want to buy a property that in any market, there will still be some sort of pool of buyers. Now, we're not expecting high prices or pricing maybe not to adjust, but you want to be in a place that's still always desirable in case you do need to sell, because life happens. There's always stuff that happens in life, inevitable things that sometimes change the course of how long we're going to hold on to a property. So I always have that outlook, but just kind of interesting to see that what they're saying, we're going to a more typical housing market. So very interesting. I'd love to get your guys' opinion on what you think, what a typical market would be. And big shout out to Buffalo Bobby. Sac sign is fire. Thanks so much, guys. That's a new sign that we're getting over there. I'm still working on it. I'm still trying to make it look better. Ironically, it's very difficult to actually make neon look good on camera. So we're still tweaking it a little bit, but it'll be good. It'll get better. So appreciate that. Now, another thing, I want to bring up a forecast from National Association of Realtors. So NAR, huge organization when it comes to realtors and lenders, big organization, nationally recognized. of course, and they always do some sort of forecast and economic kind of outlook on the market. Of course, they work with tons and tons of real estate agents. So they've been pretty good, I would say, as far as outlook. Now, take this with a grain of salt. These are not my forecasts. This is just articles that I'm reading. I want to bring up some points that I thought would be interesting for people making a decision in this market. This is what they wrote. While 2022 may be remembered as a year of housing volatility, 2023 likely will become a year of long-lasting normalcy returning to the market. Mortgage rates are expected to stabilize while home sales and prices moderate after recent highs. Okay, so very interesting that they're thinking that we're going back to normalcy in the market and that the mortgage rates are expected to stabilize. Now, while I personally think that we may be going back to mortgage rates stabilizing a little bit, not jumping up as fast. Now, I do believe that in the next quarter, this quarter, we will probably still see some slight increases on interest rates, mortgage interest rates, but I don't think it's going to be as drastic as it was in 2022. Now, again, that's just my personal opinion. Anything could happen. The reality is I've seen a lot of forecasts that just get wiped out based on what the Fed wants to do. And of course, inflation has been the main indicator of that, right? As inflation came out with high numbers, mortgage rates instantly responded and started jumping higher. As inflation seemed like it was getting a little bit under control, mortgage rates start to sell a little bit. So again, that's a huge proponent that's really an uncontrollable. And so speaking of mortgage rates, when we talk about mortgage rates and expectations of mortgage rates for 2023, even though I think that they're going to stabilize and probably even dip down later in the year, I always tell clients, in full disclosure, I say, hey, buy the home expecting that you're going to stick with this rate that you're getting today, the rate that you're locking in today. Even if you are getting some sort of incentives to buy down your interest rate and get a little bit better interest rate, expect that you're going to have that interest rate for the long haul. So what am I saying? Are you comfortable with your monthly mortgage payment today moving forward without the expectation that in a year you're going to refinance and drop your monthly payment a couple $100? So just make sure that you're able to do that payment today. And I think that'll save you a lot of headache in case it doesn't turn out in your favor. Rates either increase or stay the same. So that's just a little bit of word to the wise. So hope you guys, someone wrote NAR criminal organization. That's hilarious. I love that. That is so funny. Okay. So moving on. I do want to bring up from Lawrence Yun. He is the chief economist at NAR, who someone wrote in the chat, criminal organization. I think that's hilarious. I don't know what to say against that, but that's just hilarious. So give that a thumbs up, like that one. But here's what he says, chief economist. After a big boom over the past 2 years, there will essentially be no change nationally. Half of the country may experience small price gains, while the other half may see slight price declines. Okay, interesting to say that this chief economist is thinking that half of the country may experience small price gains, while the other half may see slight price declines. Now, I think that the opinion of slight price declines and small price gains can vary drastically for different people. So very interesting that he thinks that some markets are still going to appreciate, while I don't think he's entirely wrong, because some markets are still, I would say, leveling off more or staying more, I should say not leveling off, but staying more consistent than others. Sacramento's definitely been affected. I did a market update. I told you guys, you can check out the previous videos. But from May of 2022, which I would say was about our peak high time for median prices for the Sacramento region, we were about 625. We hovered down to about 550 in November, December. So the change there was about 12% in median sold prices at the time. So we've definitely seen already adjusting for pricing. So about 12% as a whole. As I mentioned earlier in the live stream already, certain neighborhoods are responding differently. Some are getting more affected and some are getting less affected. So again, that's just more bird's eye for Sacramento region. But to say that other areas may increase in pricing, it's hard to say. Places like, I know Orange County is still hot, even though they've gotten adjusted. I talked to a lot of the agents out there that are selling luxury homes, multi-million dollar properties. They're saying that a lot of their price reductions that they're seeing were on overpriced listings to begin with. So interesting perspective there. Now that is a very hot county. Again, whole different price point buyer pool of the people buying there, but just interesting to see a perspective where, this chief economist is saying that, hey, some places might actually rise a little bit in price. Personally, for this year, we'll see. I think Sacramento, I think it's been already a good sign that I told you guys even earlier. We're starting to see a lot more action coming into the Sacramento market. One huge proponent of our local market, despite rates changing this and that, is that Sacramento is a little bit of a different market. We have a big inflow from other markets, which makes us different than, a standard city, which may not have as much inflow. We have a lot of companies moving into Sacramento, and we also have, of course, the Bay Area, San Francisco, San Jose, and the counties around there that offer much higher priced homes, and is just a short drive, 2-3 hours for most of our clients, where they can sell their property for still really good money, 1.5 to 2.5, sometimes 3 million or more, and then buy here and literally get most properties brand new. Our luxury market, I'd say, is about $1 million, $1.5 million. So still substantially cheaper than their market. They get way more home. They get views. They get the works. So our market, I would say, is it's being affected with the higher interest rates, but I would say that we still have this big flow of people coming in, which supports prices kind of hopefully stabilizing or remaining a little bit more consistent than other areas, right? And again, it comes down to location. Like we have a lot of interest for places like Folsom, El Dorado Hills, Roseville, Rockland. Now, and the new construction, is getting a ton of action. Just this last week, we had a client that was hoping to purchase a home in West Roseville, about 3,000 square feet, big home and brand new. And the rep was telling me, he's like, man, this week we just got 7 homes in contract. I'm like, what's been going on? 7 homes in contract in a week for a new builder. I thought you guys were getting hit. So some are doing better than other. Absolutely. So again, just interesting perspective to see that different markets are responding differently. So good shout out to Paul Demchik on here. Finally, a new video. Couldn't wait. Big shout out to you. So if you guys have questions about what's kind of going on in the market, or I would love to get your feedback on what's going on. I still have a few more graphs that I want to pick up here. But I did want to bring up here, now that we've kind of talked about this chief economist, he also is saying that he predicts home sales, so the amount of homes that are actually being sold, to fall by about 6.8% in 2023 compared to 2022. With the brunt of the slowdown to occur in the first quarter of the new year. So very interesting. So he thinks that this first quarter of the year is going to kind of take the biggest hit as far as not as many homes being sold. Again, some of the softening can be attributed to homeowners who are unwilling to trade in a higher mortgage rate, as well as economic uncertainty. So again, there's that hold off from some sellers that, hey, I don't want to transition into another property with a higher mortgage rate. I kind of mentioned that in the beginning. That was what I was feeling from a lot of my clients. And of course, some economic uncertainty. That is definitely a part of the game right now, because a lot of big tech companies are doing massive layoffs, right? I've heard about it even from some of our clients that are working in tech, working in the Bay Area, that were planning on transition. Like, hey, we're starting to see layoffs around me. I probably don't think this is the best time for me to make a transition. And, I understand that. So huge effects in the, it's not just real estate market, it's economy as a whole. So that's very interesting to see. Now, let me pull this up. I thought this would be very interesting for you guys. This is their forecast that NAR pulled up again. So this, you kind of see 2019, 2020, 2021. And then of course, in the green towards the bottom, you see the 2022 estimates. This came out roughly end of December, if I'm not mistaken, 2023 forecast and 2024 forecast, which is what we're expecting. So Again, you see there the unit sales. So the amount of homes, number of homes, they're thinking that about 7% less homes will get sold. Now, the home prices for 2023, they're thinking that they won't increase much. In fact, if I jump into the numbers, they think that they're going to increase about 0.3% nationally. So I thought that was interesting. But then the dollar volume, so sales volume, so number of homes being sold, we're talking about gross sales volume. So they're actually thinking that less homes will sell overall, about 7%, and that coordinates with the unit sales. But for 2024, which is really interesting, their forecast is definitely more positive. Okay, so they're saying that unit sales, number of homes being sold, about 10% more. The volume of those homes is about 15% more, and home prices are jumping up about 5% for 2024. So that's very interesting to see that they have a positive outlook. So I think that they're thinking, hey, amount of homes being sold is probably going to divot down a little bit this year, but going into 2024, we'll start seeing it come back up. And I think a huge portion of that is that they are forecasting that interest rates will probably come down. And again, that's maybe right to do so in a way. This is not my forecast, guys. I'm just showing you what I've been reading on articles, just kind of give you some information on what's going on. One thing to keep in mind is that we have seen in the market definitely a quick response to rates. A few weeks ago, we saw rates dip down to under 6%. They were in the high 5%. I saw, and it was only for a few days, maybe less, maybe like 3-5 days, if I remember correctly. We saw rates kind of tip down for a little bit. The activity that week was like boom, boom, boom. Home buyers, like when they heard that, they're like, hey, let's go look at homes. Let's go look at homes. Let's go look at homes. As soon as rates kind of went back up to that over 6% mark, again, a little bit of a slowdown. So it's interesting that buyers really do respond to those mortgage rates because there's still a lot of people that want to buy. I mean, there is a huge buyer pool. I'm looking right here on my board. I have a huge list of clients right here that are planning on buying or selling this year. And so a lot of them are kind of waiting for that to really that fine line where rates kind of improve to buy. Me personally, I'm not really a huge proponent of that because rates literally change on the daily, and to look for your interest rate to change, 0.2, 0.3%, not going to change your life, to be honest. As long as you're in that range of where you need to be with current mortgage rates today, that's really how you need to look at it. But either way, we're all trying to save money. It's how it is, right? So I hope this forecast kind of helps you guys out on what's expected. Now, it's very interesting because he doesn't really think that prices will decline too much further. So I think that's very interesting. In fact, this economist that was on this earlier, he says, as the mortgage market normalizes, it will be an opportunity for rates to decline even further. Okay, so that's kind of their outlook, that rates will decline further. Yun said, adding that he expects mortgage rates to settle at 5% by the end of next year. Okay, so this economist is expecting mortgage rates to settle at 5.7%, under 6% mortgage rates by the end of next year. And so that's why you're probably seeing a more, I would say, positive outlook for 2024 is because as those rates kind of dip down a little bit, buyers will start getting back into the market and being a little bit more active, which is going to maintain pricing, maybe even increase pricing. So very interesting. I'd love to get your guys' feedback, seeing what you think. Now, I know I'm not trying to be Mr. Hopeful. I'm very realistic. If you guys have been watching my live streams about the market updates, I bring up the data of what's going on in our local MLS here. I'm talking about closed homes, closed sales. So I am very direct on what pricing is doing. Now, when I talk about outlook for 2023, I personally think that it's still going to be a very active year. I think that we're not going to have as much sales volume as we've had, not even close to, let's say, 2021 or even 2022. We'll probably start seeing, amount of homes sold kind of squeeze down a little bit just because the affordability, the buyer pool shrinks, and it is what it is. But there is still, I would say, a still very active amount of buyers in the marketplace that are waiting on rates. So as soon as those interest rates improve, it's going to be like, bam, back in the market. Just like I was saying, we had that week where rates kind of declined for a little bit, came back into pace. So there is still definitely a lot of people looking. Like I said, my board here is full of buyers and sellers that are anticipating to buy or sell sometime this year. So again, this is not me just telling you to buy or sell right now, but it's kind of an indication. If we're seeing forecasts for mortgage rates dipping down, and if that happens, pricing will probably hold, maybe even increase a little bit. If that's what they're saying on their forecast, then that may be of some consideration if you're a buyer and you're like, hey, I'm going to buy in the next 3 to 6 months. I would say with how the market is acting right now towards buyers, it's definitely becoming more of a buyer's market. I mean, it's insane to even think about the incentives that are going on right now with builders. Most of them are offering 2 or 3% towards closing costs. So if you're buying a home for $500,000, you're basically getting almost 15 grand in closing costs. And with that, that's probably more than what your closing costs are actually going to be. So you can use the extra to maybe even buy down your rate a little bit, or maybe get some extra upgrades on the home. I was just talking to my assistant here, and she was saying, hey, this builder, because we were checking for a client. And by the way, people always reach out to us about the new builds in the area. So if that's something you're interested in, we have a pulse on that market. But one of the builders in our area is doing 2% closing costs plus an extra 20 grand incentives towards upgrades. Now, that's not even the craziest one I've seen, but we're starting to see incentives like this. Now, on the opposite end, when we're going into the resale market, so the homes that are actually on the market, used homes, some sellers are starting to see and getting the indicators of, okay, the market's changed. I should probably not overprice on my home. So I'm seeing some homes hit the market already with a credit involved. So let's say they're listed for $700,000. They might already offer a $10,000 closing cost incentives off the bat to whatever buyer writes an offer on that property. So starting to see some things like that, especially sellers that need to move quick, or maybe that have been on the market for a while or expecting to be on the market for a while, to kind of incentivize buyers, because they know, if they're educated, they understand buyers are getting hit with the higher interest rates. So they're incentivized and say, hey, we'll help you out with your closing costs. Hey, we'll bring down your interest rate. We'll help you pay for that, buy that interest rate down. So as a buyer, if you're thinking for the next 3, 6, maybe 9 months, like, I look at it as an opportune time. Again, there's always opportunity, especially when there's fear in the market. I think Warren Buffett said it most famously, be greedy when everyone is fearful. And I would say that's really the name of the game right now. I'm helping a lot of investors. We're doing a few cash deals even right now. Those are really winning. Cash is really winning right now, or high down payment people really winning in the market when it comes to negotiation, because sellers want to work with you. Builders want to work with you. And of course, if you're cash or have really high down payment, you're maybe not getting as affected by the interest rates. So good opportunity if you think that the market's gonna plateau or maybe even bounce back up here going into 2024. So just some opportunity. Now, when it comes to investors, like I was saying, cash right now, people are being more negotiable than ever. So I'm seeing right now cash come in, buy the property at a pretty low price, especially when it comes to fix and flips right now, and then renegotiating in contract again. So we're starting to see a high percentage of that happening. So people getting properties at a good price, let's say, and then renegotiating after doing inspections and such again. So bringing it down even more. So like buyers, I would say, like on some properties are really winning right now. Now, on the flip coin, I just want to bring in some realistic perspective that if you are working with an agent or you want to get information on a property and you hear, oh, that home has 2 or 3 offers, that could still be a very realistic situation. Now, a little bit more rare, but if the home is in the right location, priced right, good condition, those homes still get action in the first couple weeks. So again, I don't want to give this unrealistic perspective because there are still some homes. There's even a good chunk of homes that are still getting at list price, maybe even slightly above the list price. on offer. So just keep that in mind. But I would say overall, buyers have way more flexibility. And when it comes to new builds, again, you can write offers now on a new build, whereas back, even a year ago, it was kind of take it or leave it price. We'll give you an incentive of maybe $3,000, whereas now it could be easily $10,000, $15,000. So just keep that in mind. And they're adjusting prices, which is good to see, making it more affordable for buyers, and that's what we really need to see in the market, because it's just gotten a little bit too pricey out here. Someone saying, Buffalo Bobby, you're dead on, Sam. I have 47 clients in my pipe. What he's saying is in his pipeline. So Buffalo Bobby in the game as well. So good for you, man. Hopefully it works out. But that's what we're seeing, is people being really responsive to the rates right now. And really, price cutting is not just for the sake of, hey, I want to hack a deal, but hey, I need this to be affordable. I need to make it sense for me, especially when there's uncertainty in the market. So I'd love to hear from you guys. What are your thoughts? Where do you think the market is going for this year? Do you plan on buying or selling a home this year in 2023? I like to use the phrase, the future looks bright. So make sure that you're getting opportunity and not just getting stuck on the headlines of what people are saying, because I'll be honest with you, so many people have an opinion, especially now. All of us might be getting a YouTube channel, Instagram, whatever other social media platform you might think of, and everyone is kind of putting out their message. I would say read some articles. Look at what economists are saying for the overall market and real estate market. We're probably going to see a little bit more adjustments, but in that, again, there's opportunity. I'm personally looking for investment properties right now. That's what I'm doing. So that's just something to keep in mind for, is that not to get caught up in what a lot of people are saying, because this, even in the stock market, when things go down, all the investors start coming in, and that's just how it's always been in any market. So I'd love to hear from you guys. Let me know what you think. I think that right now, if you're a buyer, tons of opportunity for you. I think that you could really win in this game. Like I said before, there's been some really big wins with the new builds lately. Last month, we closed one with almost 75 grand in price reductions and incentives. So that one was a huge win for our clients. But builders are, they want to sell. So if you're in an opportunity where you can buy something or rent it out, or as a secondary home or even a primary, I think you're in good shoes right now if you can purchase. Interestingly enough, I've had people sell their homes last year, rent for a little bit, and now they're coming back into the market. It's like, hey, I like what I'm seeing, and so they want to buy a home again because they believe in the long lasting value of a home, right? The people that have actually had equity gains or have owned homes before, they just know it's always up and down. This market, real estate in general, is a cyclical market. It's always been up and down, but if you look at data over the last 100 years, it's always gone up. And we're in a high inflationary period. So that's something to consider. I mean, that's what I'm considering, is would I rather have money in my account, or would I have assets that have opportunity to appreciate or even cash flow monthly? So that's how I look at it when it comes to real estate or even buying any sort of asset right now in this market, because I think that's what we need to be thinking about. And again, this is not financial advice. This is me. This is how I think. So just giving you my perspective, is that looking for assets in a market like this where money is becoming less and less valuable technically with inflation. So again, I think good opportunity to start looking for investment properties, maybe even considering some sort of Airbnb situations. We actually have a few awesome clients here locally that's what they do, is they manage Airbnbs professionally. They own and run a ton of units. So that might be worth something still looking into here in Sacramento. But yeah, big shout out to my buddy Mark. I see him on the channel right now. Go Sam. I appreciate that. I love the cheerleaders on the channel, and I really enjoy being with you guys every week, live Tuesday at 5:30 p.m. So I hope you guys like the sign. We're still working on it. If you guys help me out with the studio, I need to make it better. So if you have some ideas, drop it in the chat below, drop it in the comments. We'll make sure to make it happen. Guys, I hope you've enjoyed this video. I hope it's been beneficial to you. And if you're thinking about buying or selling a home in 2023, set up a consultation with us down below. You can just click the Calendly link and set up 15 minutes with me, because really when it comes to buying or selling a property, it depends on your personal situation. I'd love to do a consultation with you and help you out any way that I can, give you my opinion with your situation. So that's really the best way to do it. You can also give us a call or text if there's any way that we can help you with buying or selling a home here in Sacramento. But for now, make sure to hit that like button because it really helps me out. We work really hard to bring out content every week. We're doing like 2-3 videos new every week. So please hit that thumbs up, let the video play all the way through, send it to your mother who may need to hear this message, and I really appreciate it. Guys, but for now, my name is Sam with Golovey Real Estate. If there's any way that we can serve you, let us know down below. But for now, ciao. We'll see you next week.